Today's trading shows that the market's consolidated a bit, but there's very easy technical levels that the candlestick analysis can use. For example, we know that as long as you're above the T line, you're in an uptrend. We know if you're above the 3T line, you're definitely above the T line, that you're still in a strong uptrend. Today, the Dow backed off, hit the 3T line, and came back up. That basically told candlestick investors that this uptrend is still in progress. This wave 3, which broke out from this sideways consolidation, could have the same magnitude as wave 1 that started right after the election and came up over 1,000 points, went sideways. Now we might be in wave 3 going up another 1,000 points. So all we have to do at this point in this trend is stay long until we see a sell signal and a close back below the T line. Because the overall market trend is still bullish, that allows candlestick investors to identify which patterns are setting up for good strong price moves or breakouts. Here we have a fry pan bottom in Kate. There's been rumor of Kate trying to get itself sold. So when is it time to be buying? Well, we can see that the fry pan bottom still had buying coming up through the 200, staying above the T line. So if you're buying right in here because the 200-day moving average is not acting as resistance. Also, we have our little simple visual analysis of the T-line crunch. Notice how the T-line kept crunching the price up through the resistance level where it wouldn't let any close below the T-line. That told you there wasn't any more resistance here. A breakout situation can be identified, or at least you can put yourself in situations where the probabilities of being in the right place at the right time are extremely high. That was the same scenario on our recommendation this past week on TGH. You could see the J-hook pattern. Wave 1, wave 3 should be the same magnitude as wave 1. We've got little fine points to tell us that a J-hook pattern setting up. Notice we have a bullish candle, a doji. What do we know about the doji? Trading will move in the direction of how they open after a doji. So the fact that they open positive and trade positive told us, number one, that the magnitude of this day was going to be the same the magnitude as this day, thus your doji sandwich. Number two, we're trading back up above the T line. Number three, we know what the results of a doji sandwich should be, more upside. And if there's more upside, that concludes that we're in wave 3 of a J-hook pattern. These simple analysis situations put investors in the right place at the right time, whether you're trading stocks or have the ultimate timing for getting into option trades. Analyzing what usually occurs in human nature allows a candlestick investor to know what should happen after a very strong price move, such as our best friend signal, a doji followed by a big gap up. What do we expect after a doji followed by a gap up? Remember, a doji represents indecision like we saw in this whole time frame right here. When they gapped it up, we can analyze that there's probably going to be more strength in that trend. Once again, putting you in the right place at the right time. You might not participate on that day, but knowing what type of signal occurred here allows you to analyze what you want to be doing the next day or participating in that trend from there. That'll be it. We'll see you in the chat rooms.